growing the local manufacturing sector, we should think of ways where we're building our local capacity so we can use local materials most of the time for most of what we're doing. So I think even in terms of the energy product that would be used for some of those houses, we should think of building capacity in-house. So companies are already doing it, but supporting those and actually patronizing them so that we can build our local sector of manufacturing for energy products, for building products apart from the normal ones like cement that you'd have. But let's start building our local manufacturing sector to support the housing industry. There's an opportunity to make both financial returns and social impact and environmental impact. So there are a group of investors that are coming, and we all need to see the opportunity that is there. There are obviously challenges, and one of the big ones I see is the credibility of some of the projects that underlie these investments. So the problem is that the industry in general, for instance, energy, the industry is it's growing, but there's a lot of developers that are learning the ropes as they go, and that's the challenge that we would see as you try to find credible investors. So I think the discussion on capacity building is very important. So capacity building for those developers and those people that will be involved in some of these projects. Because even if you try to raise funds and you don't have credible projects underlying it, then your funds are not necessarily going to be put to the best use. So I think that's some focus that we can look to achieve. And then I think the second thing is, even as we try to, I think Afolabi mentioned that we didn't have any foreign investors in the previous round. As we try to get foreign investors, I think we should be aware of the potential currency mismatch that might arise because you have projects that are getting their revenues in local currency, and then if your bonds, if your investors are partly local, partly foreign, then you have to consider how you're going to hedge against those exposures that you'd have. So I think those are some of the things that we should consider as we go along. So there are impact investors today that want to focus on economic impact, some financial returns, but they also want to see a huge social impact and a huge environmental impact. And I think that if we limit our view to just the returns, then those impact investors that are flooding the market every day are definitely going to sort of overshadow the market and probably take advantage or run with it if we don't try to see what advantage we can get by being part of the process. So I also have a view of the developers in the industry that are sort of trying to do clean projects or clean energy projects. And I know that for them, being involved in or trying to even issue a bond, even as developers, is good for their profile, is good to increase their, well, we said their investor base, but even their profile as responsible. And so I think that's an attraction to them to say, okay, yes, I'm willing to try this out, and I know that I'd attract a certain class of investors. So I think we shouldn't ignore the new class of investors that are coming along.
To address some of the issues about whether what you're deploying it to is going to be lucrative or not, I can welcome you to the LPG space. It's a potential $10 billion market for Nigeria, as far as I'm concerned. Import substitution, for example, for PMS, that's running at about 60 million liters a day, could be halved by using LPG for the cars. Ghana, just down the road, uses LPG for their cars. So today, if you raise the price of 1 kg of LPG, it's an uproar because there are two markets that are dependent on it, the housing sector and the automotive sector.